Hey, how's it going? My next guest seems to have been born to be a trader. James Bentley left school around 17, went onto the trading floor, loved the cut and thrust, and never looked back. Today he runs his own education firm, still loves the cut and thrust, the banter, mixing with the old guys, the new, and pushing forward into the international space. I found James to be very real, grounded, smart, go-getting, and with a sense of fun. Here's James. James, how are you doing?
Hey, yeah, very well, thank you. How are you?
Yeah, good. Thanks for joining me today. It's been a while since we first spoke, but we've been trying to get these dates nailed down, but it's great to have you here now.
Yeah,
You're
thanks
based
for
in
having me.
London, right?
Yeah, so our trading floor is here in Chelsea, so we're just on Chelsea Harbour. I'm Surrey myself, so yeah, not too far.
Okay. Where in Surrey? That's where I grew up.
Banstead?
Okay.
Do
Yeah,
you
it's
know it well?
not so well. I'm more Byfleet, Weybridge, Woking sort of part of Surrey
Yes,
originally.
yes. I used to play football that way, so yeah, I know well.
Okay. Good.
Good.
Good. So how did you get into trading?
I've got an extensive family that are in the industry. So my journey started in 2009, leaving school immediately. My birthday's August, so I left school 15, turning 16 in August in the summer, and I went straight into the city. So my first role was a junior at ICAP, and ICAP back then was a huge, I mean, still are, interdealer broker. Um, they was the middleman, should we call them, for a lot of big players in the game. And yeah, you start as a junior, so you're hovering around, shall we say, until you get trusted to work on the next desk. So for me, that was equity research, and started as a junior there on equity research, and um, loved it. Crazy, crazy environment. Completely different to how it is now. Back then, it was very much kind of who you knew to get in there rather than what you know. A lot of these big banks and brokers have like graduate schemes now, so they already cherry pick the top 1% out of whatever university and bring them onto trading floor. So very, very different. I actually done work experience there a few years before that and just fell in love with the industry. It was more so the monetary value and the figures that were flying around the place that caught my attention. And I settled in quite nicely. I was there for four years in total.
Okay, and what drew you to this rather than say investment banking or even banking?
Um, it was more the opportunity that I got. So I got a family. I mean, honestly speaking, I got a family friend who super well known in the industry. I mean, still contracts for one of the big banks today, and he was the family friend that had the Ferrari and the swimming pool and the beautiful house in Surrey, in Oxford actually, and it was one, yeah, it was someone that I kind of aspired to and looked up to a very young age actually. And he contracts for some of the world's largest banks now. So I had that in my mind, sort of where does that come from? And as you're growing up, you always aspire to have things you can't have, especially at a young age. So he's in the industry and he sort of opened the doors for me to go into ICAP as my first role. Um, so that's kind of, I would say I more fell into it with the dream of being in the environment of money and wealth and trading and banking, and more so what I know it could bring as such. I still have family members that work at ICAP now, so it was yeah, it was kind of there for me, shall I say.
Okay, yeah, and so you started with equities. What did you learn while you were there?
It was equity research, so you're given a task, whether that's a weekly or daily task, and it's to generate research on certain asset classes. You bounce around different teams, the risk team, the hedge team, and find out where this asset can piece or find its piece of the pie. So it was a good couple of years that I spent on the equity research desk, and then I got an opportunity to work on the risk desk, which I didn't like as much as the equity research as such. It was a lot more kind, not so much that it was fast paced. It was a completely different environment, different people, different characters. But yeah, I learned in terms of how to be organized, how to create structured reports, how to deliver these reports to some of the seniors. And it wasn't so much of the trading element that I learned, it was more about presenting people skills as well, because you're dealing with, again, some senior characters, senior traders. You've got to deliver in a presentable manner. And back then the HR departments wasn't as strict as they are today. So it was again a wild environment that I loved.
And when did you get the first chance to trade?
So I was there for 4 years, and two of the senior team that were there branched off and set up a boutique fund in Mayfair. One of the guys actually brought FX as a product into ICAP and many other banks. They was working with an exchange at the time, and as I say, they brought that whole product into ICAP, and that was just after I was there. So maybe 2011, I would say it got brought in as a product to trade. And two of the guys branched off. They pulled a nine-figure fund and set up a boutique fund. They had a very, very small office in Mayfair. So I jumped ship and went with them. And they just saw my ambition, and I was the type of guy that would ask 101 questions a day and drive you mad, and people would run away from me because I was intrigued and wanted to know and wanted to find out more. And again, it was like when they're talking about their bonuses and stuff at Christmas, it was like, how can I get that? And being 17, 18 at the time, it's all you think about. And salary wasn't great back then at all. So yeah, I jumped ship and went with them, and I moved straight into a more analysis role. Um, they were still heavy on fundamentals rather than technicals back then. I think that is majority of the old school way of trading, to be honest. Um, but it was about a year into my journey there when I was starting to pull the trigger on a large fund. Throughout that period, I was dabbling, doing my own thing. I was trying to learn a million and different one ways of trading at once and overcomplicating it completely. And those guys were they were senior back then, so they wasn't into the high tech supercharged way of that trading is now and fancy indicators. It was very black and white, straightforward, follow direction, find momentum, pull the trigger, get in, get out. And that was their style, which is still my style today. So it was very basic, but very, very enjoyable. And it broke it down for me really because I was spending so much time online and speaking to different people and different characters, trying to work out what is my personal style of trading. And I kind of went on this whole journey to go right back to basics, and basics works, which is one of the methods we teach still today to our students that come through the door. So it was when we branched off with a couple of the guys, they set up a boutique fund, and that was when I played more of a vital role in um, dealing, pulling the trigger, working with their clients, and so on, and bringing on investments. And it was more of a sort of 360 hands-on role. And as that progressed, I then moved into executing a portion of that pie for myself.
Okay, and what were you trading? Forex yourself?
The latter stages moved into Forex, yeah. Forex back then wasn't a huge product. I wouldn't say it's new because it's not new, but as an accessible product, it was new. It wasn't as frequently traded as your equities, as your debts, and so on. There was different products with that in a bank that was a lot more popular, shall we say, than FX at that time. It was only sort of, I would say, is it's sort of 2010 onwards that it become very, very accessible and a lot more frequently traded. So towards the back end, yeah, FX really dominated for the amount of money that was involved.
Okay, and what was your favorite pair if you had any?
So we used to trade. I mean, euro dollar was the standard that we used to trade. I built a personal preference trading yen, and that was moving from understanding equity indices into safe haven trading and picking up the yen when we got some of the larger pullbacks on the equity market. So it was yen that I caught preference to, and I would actually say a majority of my positions today are short positions for whatever reason. But out of those positions, it's I trade a lot of yen.
Yeah, it's been very weak, of course, for the last year or so, hasn't it? Yeah,
Yeah,
it's complete. No wonder the stock exchange in Japan is the Nikkei is
yeah,
going
right.
up. But yeah. So is that yen against the pound, or rather the pound against the yen, or dollar
Yeah,
against the yen?
I mean, I would say there's no real sort of standout preference, but for me, I trade a very sort of smash and grab momentum style. I don't try and get in as early as possible, and I don't get out as late as possible. For me, it's about catching momentum when it's there, getting in, getting out, moving on. And yen pairs as a whole, Japan as an economy is strong, but yen pairs as a whole, when they move significantly and they move collectively. So you are sport for choice in terms of where you pull the trigger. So a lot of the yen crosses is where we go when we see yen picking up strength for various reasons and vice versa. So um, one way that we trade and we teach today is to not rely on your analysis for next week or next month. The market is the market. It has its own mind. It's as big and as wild and as crazy as you like. And tomorrow's a new day. So a lot of our style of trading that we teach and trade ourselves is very in, out, job done, move on, come back tomorrow. It's not often that we have positions running overnight, most definitely over a weekend. And as I say, it's very kind of smash grab in and out. Where's your momentum? We're not trying to outsmart the market and work out what's going to happen next week, next month, next year, because nobody knows that. But when there's money on the table and the market's moving, we take full advantage of it. It's down to currency strength, and that was one of the first things I was taught years and years and years ago. Identify your strongest currency, your weakest currency, put them together, and that's your first trade of the day.
Okay, and so any given morning, what are you looking at? You're looking essentially at your favorite forex pairs, maybe two or three.
Yeah, yeah. I mean, when we say favorite, I would say we have preference of over other pairs, but there's no sort of standout favorite. So my morning starts just gone 6 o'clock, and the majority of my trades or my first trade of the day will be pulled on the hourly time frame at the 6:59 close into 7 a.m. in the morning. So that sort of 45 minutes or so that I have in the morning is working out where the money is, where's the flow, where's the volume within the market. So the standard routine is, of course, check your news and check what the dollar index is doing. If the dollar index is giving us a clear clue as to market direction, market sentiment, we'll understand that there's some weight in the dollar this morning. We then look at the major currencies, euro dollar being next. Um, and of course, if dollar index moving up, we'll look to trade euro shorts. And then we'll need to work out, are we shorting euro dollar because the euro's weak or the dollar's strong? Which one is it, if not both? And that's when our cross currencies come in to understand which angle we're trading. So it's not always the prettiest of entries or the most textbook of entries, but we're simply following the money, going where the money is, what markets are strong, we're getting in, getting out, moving on. Therefore, we don't overcomplicate it. We never run into trouble. We're not getting in as soon as the market turns. We're just hopping on, hopping off, and just riding the wave. And it's proven a simplistic way of trading that works. And a lot of people that work with us now and moving forward have tried many different strategies, hundreds of different strategies, and all these new techniques and rebranded words that are out there at the minute. Everyone wants to be this institutional trader and they want to trade, I think it's ICT, and I don't know, they make things up these days, but the reality of it is no retail trader trades like an institutional trader. They are miles apart, but apparently YouTube says different. So it is what
Yeah,
it
when you
is,
say
right?
in and out and you're trading with momentum, can we drill down a little bit and get a bit more detail? So,
Yeah.
what time frame are you on? Are you using any indicators, volume,
We're
footprint?
yeah, for me volume's quite lagging unless you get true volume, but a lot of us we can't access that. It's 1 hour time frame or a 15-minute time frame. Personally, majority is hourly time frames, and it is first thing in the morning in and around the European Open. It's the key is identifying your strong beat weak and putting them together. A lot of people think that two strong currencies, the market's gonna boom, but they simply just fight each other. They butt heads. So you need the bully in the playground and the weakling to put them together to see some explosion. So once we identify your strong beat weak, and it could be a case of looking at again fixing against your majors. If pound dollar's going up and dollar yen's going up, you've got a strong pound and a weaker yen against the dollar. Therefore, pound yen would be the first point of call that morning. Hourly time frame, for is it in line with higher time frame trends? So we'll still look at the overall bigger picture, work out is there any obstacles blocking any potential take profit. That could be pivots, it could be a horizontal level, it could be a 200 moving average. If the coast is clear, we'll then work our way into the 1 hour time frame and look for momentum based entry. So that'll be buying on the likes of an engulfing candle or bullish price action bar, and riding the wave or swimming with the tide is the only kind of explanation I can give to not sit and wait for the perfect opportunity to come because you may miss it. But if money's in the market now, in 2 hours' time, it might not be. So while it's there, take advantage. Don't be greedy. Hop on, hop off. And that's what we do. A lot. We have our rules and we have a disciplined way of entering and exiting the market that we give all of our students. But in a nutshell, it's keeping it simple, not overcomplicating it. Nice, clean charts. Price action is the only leading factor in what we do. So understanding candlesticks, price action, your market structure, your context of a chart, and narrowing it down into areas to trade. And when momentum kicks in those areas, you get in, you get out, you move on. And that's kind of how we trade. And we do obviously have a variety of strategies that we teach our students now. We have end of day strategies for those that are in full-time employment. So those working 9 to 5 naturally can't trade while momentum's busy and momentum's there. So they'll trade an end of day strategy which works on reversals. And we have a variety of strategies to cater for each individual. But personally, and for the guys that I work with and that come into our trading floors in the morning to trade with us, it's momentum. Follow the money, don't be greedy, get in, get out, move on. And that's the simplistic way of it, shall we say.
Hey, real quick, I don't know about you, but every so often I get pretty tired, frazzled, whatever, when I'm trading, usually after a few hours. And the usual thing is go and top up the coffee mug again. Now, I came across this energy drink called Magic Mind, which does the same kind of thing as coffee, but it's gentler. The caffeine in it is based on matcha, which is found in green tea. It also contains some great ingredients like mushrooms of different kinds that help with mental focus, performance. It really helps sustain your energy during the day. So I come back to my charts and I'm, the next few hours, I'm still sharp focused, but I don't have that kind of bump that you get with coffee, up and down. Now you can get Magic Mind. They come in these little shots through my link with a massive 56% off on a subscription, or 20% off with a one-time purchase. Give it a go. It's got a nice taste. It's kind of like passion fruit, but not sweet. And you knock it back in one. It's like a shot. Great. Give it a go.
Are you making use, when you look at your chart, of supply and demand zones, the key ones, and this was a smart money
That's
concept?
this new.
Is that does that inform your strategy at all?
I'll tell you what. So we plot our levels and we identify historical turning points, and I'm quite fond of pivots and S2R2 as my parameters, and that's my, when you take the kids bowling and you put your sides up, that's my S2R2. That gives you your parameters to play between. This whole smart money concept, I'm against it, if I'm honest. And I'll tell you why. Every 3 or 4 years, bearing in mind I've been in this industry since 2009 at a young age. A lot of these seniors are not into this social media and so on. Like the guys that we work with cringe when we talk about things on Instagram and whatnot. That's just not their cup of tea. They're way past that. This whole smart money concept, every 3 or 4 years, it's rebranded. 3 or 4 years ago, it was called something else. In another 3 or 4 years, it will be called, I don't know, someone else will make up a fancy name for it. All it is glorified support resistance levels and glorified price action. Price action is the only leading factor in what we do. There's all of these YouTube gurus that sell packages now. Buy my SMC concept. It's what the institutions do. Barclays do it. Do they? Do they really do that? As I said before, institutional trading is for majority is business purpose. It's not speculating on MT4. So it's miles apart. And I think there's this hype at the minute between this smart money concept and ICT and institutional layers and whatnot. For me, it couldn't be miles apart to what true institutional trading it really is.
Okay, so yeah,
Do you trade it yourself, or are you in it, or?
I I mean, I will look at what I think are supply zones and demand zones, usually marked out by obviously where you've got turning points
Yeah,
repeatedly on a timeline, right? Whether it's above or below price action. I followed the ICT lessons that Michael, what's his name, goes
yeah,
gives us. I mean, they're all about this sort of fair value gap, and of course supply and demand zones, and
yeah.
a lot of it makes sense. But every so often there are some horrible exceptions where you sort of follow his strategy and then you come badly unstuck, and he might just say, "Well, you haven't learnt it properly," which is
Yeah, I think
maybe fair enough, but
what we've got to remember is the market's moved on business purpose. It's not moved speculating on chart patterns. So when I plot my levels, I religiously plot them at round numbers because it has a meaning. And I know these guys, and I've been there on FX desks in the past, learning and in the environment of FX desks. These guys are not sitting on a chart going, oh, if this gets to this price, we'll move it. It's, I know my level, euro stronger at this price, I'm getting the most for my money. Markets move to that level, held at that level, price is pegged, deal's done, and off it goes again. So it's psychological numbers that are used and have been used for many, many years. the banks and institutions, they have their set levels and they have their ways of trading them, and these haven't changed in donkey's years, to be honest. So that's never going to change on how the market's priced and how the market's moved. So I think if we take that and with an understanding of how the business side of this market and trading really, really works, we can then do our best to plot our retail side in and around what they do, block ourselves into small areas, i.e. I use my R2S2 pivots, horizontal levels and so on around numbers. And if I find an area that I believe is a safe area to buy and I catch momentum in that area, I'm in, out, job done. On the majors, I work in blocks of increments of 50, as in 50 points. And on all of my charts, I have very, very faint lines at 126, 126.50, 127. And that gives me a bit of an understanding as what my intraday burst of excitement could be today. So the average trade for myself is 20 to 30 pips max.
Okay, so short bursts, really. Yeah. Okay,
Yeah,
makes
and,
sense.
and I shoot myself in the foot because every trade I take then goes and does a little bit more. Some don't, some do. And the good thing about being in an environment, we've got a couple of boys that on our next to me now on the trading floor that they coach our traders, and some of these are longer term time frame traders, and we all have a bit of fun and a bit of competition on the trading floor. Who can get in the earliest? Who can make the most? And one story that I always tell is trading pound yen, and we all had to put a bit of money in competition just to keep the trading floor banter flowing as it does. Got in the move nice and early, winding them all up. Hours later, I forgot about the bet. I'm out the trade. Honestly, it was 3 months later, one of them popped up. How's pound yen going? I'm X amount up. And I said, you could have sworn at him. And he was still in it, riding the wave. And I was out a few hours later. So it swings and roundabouts, isn't it? It's personalities and styles.
Yeah, you prefer that short-term thing, that in and out. You don't do the longer trade.
No, and it's because I've seen it work on a huge amount of money and funds that are trading in the nine figures, and they don't want to be exposed to incredible amounts running, drawdowning, and negative because the monetary value side of things isn't too good for your head, seeing those big figures churn. So where I've seen it work for years and years and years, it's something that's just stuck with me and stayed. I've seen it with my own eyes. I believe in it. I was taught by some of the guys that have 30, 40 years deep in this industry. So for me, it was don't break what's not broken. And basics works. These guys are senior. They're in their 60s now. They're not wizards on computers, and they're just about give me a FaceTime every now and again. So for them, it's no sort of high tech way of trading at all. It's simple, in out, job done. Tomorrow's a new day. Let's not predict what's going to happen tomorrow because it's the financial markets. It's mental.
When you mentioned numbers, typical numbers like zeros and so on, so that's looking at, presumably you're going back quite a long way into the history of any given asset, and you're looking at the numbers that are significant, and now you're making a note of those. So your zeros are of interest. What else?
Yeah, strong level we respected on any time frame. Obviously, it's priced at a certain point. So the majority of my time spent on a 1 hour time frame. With the amount of bars and cycles that we see on a smaller time frame, it's exaggerating what's happening from a bigger time frame. So, pardon me, the level's strong. You'll see multiple interactions even on a smaller time frame. So when I'm plotting these levels, it is round numbers. If I see something that stands out to me, I'll naturally find the closest round number relative to where I am. So if I'm looking at buying into that level, I'll bring it lower to the nearest round number to get the interaction as soon as possible, rather than obviously letting the market run and missing a level or so on. So for me, round numbers works. And as I say, where I've seen it from the other side, these guys are not speculating on MC4. They know their round numbers. They know their levels, psychological points. They know that a trade or deal's been done at that point previously, and they can repeat that moving forward.
Okay, yeah. And are you applying the same kind of strategy on other assets, or do you change your strategy for, say, stocks or whatever that might be?
I predominantly trade FX now. Indices, we have a slightly different style of trading. We trade US stocks as well at 230. So these are more breakout opportunities. Again, it's still a burst of excitement as such. You're not sitting patiently waiting for weekly levels to be tested months later. It's what's happening today, as I keep saying. So for equities, it's a similar style of trading, but more breakout. So we have a gap strategy at 230. We have a filter process that takes all 500 S&P stocks into consideration, and it filters it down to volume and other aspects. It will leave us with three or four on the open, and then we then break those down and work out which one we're going to pull the trigger on. We trade the DAX first thing in the morning as well on the Frankfurt Open, and that's just again a breakout strategy. So other than that, for me personally, I mean, we've got 28 traders here; they all trade their own style. But for me personally, it's European equity in the morning, and I would say 80% of my trades are done in the morning too. It's not often that I trade the US session anymore. Apart from if I'm in the office with a team, we'll look at how the Dow's open up, how S&P's opening up, and then if there's volume in the market, we'll then look at the actual stocks within those moves. What's driving the S&P? What's driving the Dow? Other than that, investing wise, we look. I mean, I do a lot of gold ETFs, and I'll look at other correlated markets that give us a heads up to what's happening in our world. Other than that, for me, that's more of the intraday side of things and some long-term stocks and whatnot running in the background. But FX is the bread and butter.
What will you look for besides the technicals when you're trading? Will you look at any of the news coming out? If there's any sort of, I suppose the obvious ones are, bank decisions and so on. Will you be looking at that while you also look at the charts, taking that into consideration?
Yeah, that's a really good point. For me, it's more of a filter process now. So, as an example, if we've got pound news 7 o'clock tomorrow, I wouldn't be trading the pound on my 7 o'clock trade. Um, as I say, 6:59 sevens where I pull the trigger the most. It's more of a filter process. If I know there's high impact news coming out, I'll use that to avoid taking a trade. The news for me now, it's too unpredictable. If you talk years and years ago, it was quite easy is not the word, but it was repetitive. An economy increases interest rates, value goes higher. What we're not seeing that now. We're seeing interest rate hikes, but then we're seeing that has a negative impact on the currency. So what it should be on paper is not happening. And for me now, the news and fundamental side of things is far too unpredictable.
Yeah, it's interesting you say that. I thought it was me,
No,
like the rule usually is, the interest rate goes up, the currency gets stronger, but
it's not happening, right?
it's not happening every time, right?
It's too unpredictable,
Yeah,
and I mean, I don't know anyone that trades the news consistently and can pull up a good track record. Same as these NFP gurus, each Friday they pop up with a few million made and whatnot on their demo account. So for me, it's a filter process. If I know it's an obstacle, I'm avoiding it, and that's more so because I'm only looking for 20, 30 pips. You look at the average range of a daily candle, it's 130 to 150 pips a day. So we've got 28 currency pairs plus gold, indices, commodities, everything else to nick 20 or 30 a day from. Um, so for me, it's a filter process. And also on that point, I had a conversation with an uncle a couple of weeks ago about this. 10, 15 years ago, you didn't have the president of the United States on Twitter shouting his mouth off, which we had when Trump was in Parliament. So news spreads now way quicker than it did 10, 15 years ago. The amount of people that have an influence on the market are kept up to date a lot quicker now than they was 10 to 15 years ago. Traders have emotions. The guys that are pulling the trigger still have their bias and of opinion as well, right? So when these news release comes out, yes, the trading floor manager will have faith in the individual trader to cover the risk, hedge the position, do what they need to do, but they're humans. It's still their thoughts, feelings, and concerns around trading, isn't it? So if they've got a biased opinion to pro this or con this, they're going to have their own input and take a trade. And if we're talking some weight in that trade and a desk that holds a bit of power, it's going to move the market. So I think the people in control that have the power to move the market are now kept up to date a lot quicker with key news announcements today, which is why it's more volatile at the open at the time than it was 10 to 15 years ago.
yeah. And sometimes there's sort of conflicting narratives in the sense that, for example, I mean, going back to interest, the interest in the UK is higher than the States, right? And the States seems more likely to drop than we do because we've got, still creeping inflation. And so you'd expect perhaps the pound to really break up at this point, but it's not. It's stalling and the dollar's getting stronger. But then I guess you've got to factor in something like oil, which is going up, and so that's also going to push up inflation everywhere, but especially the countries not dealing with the dollar, especially because right now in February 2024 the dollar's going up. So the fact that the dollar's going up is pushing inflation in Europe and oil, and surely that's going to get worse the way things are going. I mean, I don't know long term, but Do you look at that kind of scenario, the kind of correlation between assets to sort of work out, maybe we've got to move this way or that?
Yeah, 100%. We look at a lot of treasuries, bonds, and other correlated markets that can give us a heads up first. It's where we get our ideas for ETFs from as well, to be honest. So we'll look at certain gold ETFs based on the position of gold, and same with oil, works in the exact same concept. So I take that into consideration 100%, but I still have the thought process that tomorrow's a new day. So let's not try and be an economist. That's not what I'm good at. Let's not try and predict the market. It's not me. What I'm here to do on a day-to-day basis is pull a little bit of money out of the market based on where the money is. And that's why we never have this kind of long-term bias. Although I have my opinion and I share analysis to all of our community and the guys that we work with, and we're dollar long for the foreseeable future, to be honest. I still treat my trading as a day-to-day job.
Yeah, it makes sense. Yeah, because things can shift as you said overnight. Yeah.
Yeah, and it's
Like,
I think it's about being comfortable as well. So if you know by the end of each day you've got no open positions or very few open positions, then you're not obliged to have this bias that I'm long euro. Let's keep buying euro, if technically or fundamentally it's not there. And I think that's the hardest thing is sometimes for these traders that are holding positions to know when to cut their losses and say you're wrong, get out, take the slap and move on. Um,
Talking of which, how good were you when you first started? I mean, because that's the thing most of us struggle with. I've only been trading 3 years, and I still struggle with it. I'm better, but it's amazing how long it has taken me to sort of improve on that score. Are you good at just saying that's a loser, cut it?
yes, I'm quite decisive like that. And I think the positive that I had was I was in and around the industry for 4 years before I had accounts, but I would say before I seriously started to pull the trigger, I was in and around the industry. Psychology plays a huge part within this industry, and I never experienced that because I was thrown in the deep end to talking big figures on a day-to-day basis, to talking market movers rather than sitting there speculating. So I was sort of backdoored and went from the professional into the retail industry, where a lot of these people start retail and it's a year or two into their journey. They go, I know the technicals. It's up here where that's the problem. So we've got guys and psychologists that are in our team and on our trading floor now that are by far better than I am in that industry. I never suffered with it because, as I say, I was in and around the industry for too long. I kind of knew what was right, what was wrong, what was black, what was white. Um, when I then started to trade the large fund, I was hesitant to pull the trigger because of the monetary value. Being young at the time, when you're talking a 1% or 2% loss is in the 50s and 60,000s to start with, and then that escalated for a few more zeros. That to me back then was a life changing amount of money, being 20 or 21. You think, Jesus Christ, I'd love to have that in my pocket, which I didn't have at the time. So I was hesitant to pull the trigger back then, but you soon overcome it. And as I said earlier about back then, the HR department wasn't as strong now. You'd get a clip round the ear and told to man up if you're not if you're not doing what you should be doing. Whereas now you couldn't do that. So the guys that the characters that are all out the East End and good fun and loud and bubbly and a laugh, they would g you up and encourage you and get you going. So it was a different environment, but yeah, most definitely. I was hesitant to pull the trigger, but you overcome it very, very quickly, and you learn that this is a day job now. You're paid to do this, so get on and do it because people are waiting for you to. Your risk team's waiting for you to pull the trigger. Your execution team's waiting to manage the position. So it's yeah, you need to just get on with it, and that's the way I learned, to be honest.
When did you set up your own education business that you're doing now?
Yeah, so it was 2015. I branched away from the fund, and I just started trading full time. And throughout that period, I was hosting. That's when social media started. I would say about 2015. This whole sort of social media side of trading really uplifted, and I was at the forefront of trading education. This whole sort of social media trading side of thing. I'm not massive on it. I don't do all this showing off on there. But when it first started, it was, oh, we know James. James has been in the industry for years, and I was plugging a lot of people into brokers and so on. So I built a reputation up hosting live trading events. Um, Back then, I mean, now you've got millions of trading brokers, CFD brokers. Back then, you had a couple. It was FXCM, it was Alpari, Saxo Bank. It was the big guns, and a lot of those brokers provided liquidity for all these brokers that are out there today. So I was hosting IG, another one. I was hosting live trading events. So they would fill a room up of all of their clients, and I would go in there, teach a strategy, and trade live all day long. And I built up a really good reputation from doing so because no one had or not many people had the balls, I would say, to stand up at the front, entertain a crowd, and pull off results. Back then, this industry was very small. The industry now is huge. Back then, everybody knew everyone. It was a small industry. So if you fire out 10 trades and you get wiped for 10 trades, your industry, your reputation's finished in the industry. And I kind of thrived on it. I kind of rubbed my hands and said, let's go, let's have some fun. So I'd done that for a couple of years and built up a huge reputation. And I was working for different brokerages, then education firms I was sort of contracting for and hosting these live events and getting firms going really. And I saw a bit of a gap in the market for top quality education at an affordable price, not prices that rip people off these days, but most importantly, holding new traders' hands. And I worked for a company at the time I was contracting, and I saw the way that they treated people. They were charging in excess of 20 to 25K for a program over 12 months and fobbing them off, taking their money, saying, well, there's your education, go do it. If you can't crack it, jog on. And it was awful. And I had a case actually. It was a friend's auntie went and paid 5K for a program, beginner's program, has no previous experience of trading. And after she done it, I spoke to her. I said, "Why didn't you just tell me?" And she said, "Well, I wanted to learn the basics and then come to you to show you that I'm serious. You're not just teaching me from day one." I said, "I understand that." So she spent 5K on a course, 3K in a trading account that she lost in a couple of weeks, and it completely turned her off and against the industry. So after that, I said, "Well, let's." I pulled a team together and I said, let's offer affordable education. In fact, let's give people the chance to learn about this industry for free. And then if they decide to work with us and enjoy us and think we're a good laugh and want to be in our presence, then of course we're going to have further courses and programs. But every single course that we run now has an end goal. So no one just does a course and walks away. The end goal is either employed by us, a qualification. So we run an off-call regulated diploma in financial trading, which is equivalent to a UK degree. So it's the highest regulated standard industry education. So they can get qualification, which is a stepping stone into banks. So we pull in our contacts and put people in places. Funded by us. So we have the facility to offer live capital. So it's none of this prop money and pay $100 for 10K. It's real money. And this can range from a starting balance of 60K up to 2 million per head, and that's on a 50-50 profit share. In fact, one of the investors for that is one of the guys that I went to the fund with, so it all circulates back quite well with. Yeah, so it's to be employed, to be funded, to get qualification. So there's that purpose-led um, program for each individual. And our programs are no less than 12 months, and people have to commit 12 months to us and of pain, of hard work, of gritting their teeth. Otherwise, we won't give them the opportunity.
And what do you price it at?
So our beginners program is completely free of charge. So it's an online course which I've done myself. Teaches the foundations of trading. It's webinars every single day. So there's a variety of my team that host live webinars, and it's live trading, and they're all good fun. Everyone's a character. Everyone has a laugh, and they make people enjoy trading, and they take trades live. So it's the opportunity to tune in, follow a trader, learn their routine, their personality, their style. Most importantly, the key message for all of our live webinars is show everyone how simple trading can be. Don't sit there for a million indicators and 100 lines across your chart and colours like a rainbow. Keep it simple, strip it back, and show people that they can fit this in and around their day job. So the beginners program is completely free of charge for 3 months. And throughout this program, they get an online course, webinars, they get 3 one-to-one coaching sessions. And so if anyone's in London or Dubai, they can come into the trading floor and sit with one of our senior team, be in the environment. And that's 3 30-minute sessions to give them a feel for what we do. Um, Mentoring sessions, there's hundreds of hours of education online, and it's a package for people to dip their toe in it. And I mean, we could onboard up to 500 a month, of people joining our entry level program. And then after that, we have a 3 day intensive crash course. So this is priced at 1,500 quid. So it's a 3 day course with a 3 month follow up support. And then our advanced programs, which are qualifications, funded accounts. Uh, we've got a lot of data, COP data that we've broken down, and seasonal studies and that type of thing. These programs last for a minimum of 12 months. So I always say 1 to 3 years for those programs.
And you're the founder of the group?
Yeah, myself and my partner. Yeah, I got another partner that's worked on trading floors with me over the years for different firms. So he looks after one side of the business, and I look after the trading and the fund management side. So
Okay, so
yeah,
are you like a limited company or a partnership?
we're a limited company. Yeah. So we're set up. We set up officially April 2018, and we hit the ground running. I mean, since then we've now got 28 traders, probably 35 staff in total. We've got an office here in Chelsea. We've got an office in Dubai, which is our project that we started last year, which is running tremendously well. And the plan is to move that across into GCC and following years to open up in Africa. When we was brokering and working for these, I mean, Saxo Bank was the biggest one. They sent us everywhere. We went to Singapore, we went to Scandinavia, we went all around the world hosting these live trading events and teaching courses and whatnot. And it's a great fun. We've still got the bug to go out there and do it more. So it's the plans for the business is to continue growing. We've got thousands and thousands of clients. We've got millions in capital that we dish out to certain individuals, and the plan is to open up trading floors in as many locations as possible, and just with the continued message of try this for free and keep it simple, and that's it. You'd have to
Sounds
you
really
need to
cool.
come to one of our events, one of our
Yeah,
trading
sounds
events.
like it.
Yeah,
Well, yeah, not just that, but I was curious. I mean, I've seen you appear on, I suppose, mostly LinkedIn
yeah.
with your event videos or even just a picture. And so you're clearly very busy with your events and they seem to be going really well. What else do you do in terms of marketing? Just curious.
I get invited on a lot of invited to comment pieces for your Forbes, for your Bloomberg, Reuters, Telegraph. I'm quite busy. I get a couple of weeks where I'm featured somewhere, so we get quite a lot of traffic and business from that. Um, Pre-COVID, I was doing a lot of marketing and even podcasts and whatnot, but the organic side of the business went absolutely ballistic throughout, from the education side anyway, throughout COVID period, that it hasn't slowed down. So at the minute it's mainly LinkedIn that my team posts stuff on for me, and it just gives everyone an up to date running of what's happening within the business. We run regular events. I'm actually on Bloomberg Arabia at 8:30 tomorrow morning, so we get, which is great for the Dubai side of the business. It's a lot of PR stuff that comes organically, to be honest. As I say, I was really busy before COVID, and I lost the bug for keeping everyone up to date with what we're doing throughout that period. But over the last sort of since August, I would say that we've picked it up and we're documenting the journey as such.
Yeah, talking about documenting, what would you say is your kind of unique selling point? Why, if I'm a trader or if any of my listeners here or viewers are
Yeah.
watching and they're thinking, oh, yeah, maybe give that a go. What makes you stand out as against your competition? Why you, basically, is what I'm saying.
Yeah, I think first of all is we have an open door policy. So if you want to do this, you've got to commit to us first of all, but most importantly, you need to commit to yourself. So if you live in Manchester and we're an hour's or 2 hours train journey away, don't turn your nose up at it. Get down there, spend time on the trading floor, show up yourself and show up to us, because we open doors for a lot of people. So the fact that we've got an open door policy, anyone can rock up and spend the day with us. We've got, on an average day, we've got 15 traders here and probably another 10 clients. So open door policy. Also, we're accredited everywhere. We're globally recognised. We've got awards coming out of our ears. Where all of our programs are VTC accredited and off-call regulated. Off-call provide UK government with statistics, so we're feeding back into them in terms of our pass rate and foul rate for our qualification program. So we're in a position that I personally believe, although I'll be biased, is that we're heads and shoulders above every education company within the UK, for the simple fact that we don't tell porkies. We're transparent. You can spend the day with us. You can trade with us. You can sit with us without spending a penny. But if you commit to us, then it's going to be hard work. It's not going to be easy. You've got to grit your teeth, work hard, give us 110% to get 110% back, and realize that this is a journey, not a get rich quick scheme. But if you are disciplined and patient and decisive, in a year or two, it can be life changing, as I've seen it, and the team here have seen it.
Yeah, sounds pretty good to me. Well, James, thanks so much for
No,
talking to
thank
me.
you.
Yeah,
Yeah, no, thank
yeah.
you. I'm going to
I'll have to
send you the
drop in.
yeah, I'm going to send you the dates for our
Yeah,
in the UK. We run them in London and Manchester. Um, so we're monthly, to be honest. But they're good fun. They're fast paced, and even coming to the trading floor, you'll see a lot. I mean, the oldest on the team is 67. He won't mind me saying. I think I'm right, and he's been doing this for 40 years. So when you match someone like him against these kids on Instagram that are 18 pretending they've got 10 years worth of experience, you're in two different worlds. And the way that these guys trade is so basic and simple that you'd laugh at them, but they make money, and that's the end game. The only way you measure success in this is P&L, not if you're a fancy trader on Instagram. So,
yeah, or hiring a Lamborghini, pretending.
do you know what I mean? There's a few of
Yeah,
them around here for sure.
yeah.
Good
Anyway,
stuff.
James, thanks so much.
No worries. Thank you so much for your time. Speak soon. Cheers. Bye bye.